Hello and welcome to another Smaulgld live stream, the second of the day. Today is September 12th, Thursday, 2019, and today's topic, something to put on your radar screens. Treasury Secretary Mnuchin says that the U.S. Treasury is seriously considering a 50-year bond issuance next year. This isn't speculation, right from the Mnuchin's mouth on CNBC with Betty Quick today. Let's just go through what that might mean. A little speculation. It sounds like they probably want to do it. Why do they want to do it? And what's the current status of U.S. Treasury demand? Well, right now, the U.S. issues a series of bonds. They have short-term paper, 2-year, 5-year. They got a 10-year. They don't have a 20-year. And they have a 30-year. And we've all heard the famous yield curve inversion where the 2-year bond actually pays, if you buy it in the open market, a higher rate of interest than the 5-year. The 2-year is at 1.64 approximately, the 5-year 1.5. The 10-year not paying much more than the 2-year at about 10.7, 10.68. And then the 30-year yielding about 2.158. Now, he didn't get into discussions as to what a 50-year bond may look like, but this isn't new. This has been out for a couple of years. Mnuchin has been talking about it. Kudlow's been talking about it. Kudlow's been talking about 100-year bonds. And other countries do have them, or at least the United Kingdom has a 50-year bond. I think they launched that in the summer of 2016. Austria has a 70-year bond. Now, there are some advantages to issuing these bonds, but you really have to consider whether there's a market demand for this. And Mnuchin mentioned this, that they've got to work out some technology issues. Remember, they sell them not directly to the public. They sell them to authorized dealers, which are the too big to fail banks, and then they drum up the markets and they sell them out to others. Mnuchin said that they've talked to foreign governments, and the idea would be a long-term bond is meant to match the spending requirements of an entity or a country with the borrowing ability. Now, if your company is not going to be around for more than 5 years, you would never issue a 100-year bond. That makes sense, right? If the company is a special purpose company that's designed to do something and then fold up tent in 5 years, then obviously you would not issue 10-year, 100-year notes. You could, if the understanding is that that 5-year project would somehow be able to pay interest over 100 years. But that's generally not the case. Now, with the United States, some have argued that if the United States is going to do infrastructure spending, these are longer-term projects, they need longer-term bonds. The problem with that, though, is the United States has longer-term debt as far as the eye can see. It really doesn't matter the maturity of it because it's probably within our lifetimes, whoever's listening to this, not going to be paid. So the idea is really to extend and pretend and add out more maturities. I guess you spread them out. But generally, the longer term a bond is, so a 10-year bond or a 20-year bond or a 30-year bond, the U.S. doesn't have a 20-year bond. They did consider it during the Reagan administration. But the difference between a 10 and a 30-year bond is you're going to have to pay more for the 30-year, and you're going to pay more interest on a 30-year than you're going to get paid on a 10-year. And that makes sense because the longer you hold onto a bond, the more risk you have that the entity can default or not be able to meet its current obligations or eventually pay the bond back. So the idea would be that a 50-year bond would obviously probably be marked at a higher interest rate than the 30-year bond. Now, there was talk also about, and the reason they want to do this is because interest rates currently are low, and this would be a way of locking in low interest rates at 50-year. Now, why is Mnuchin talking about doing this next year? Well, maybe they want to force the Fed to lower rates even further. I mean, why issue a bond today at when the 30 years at 2.15% when maybe 6 months into 2020, the 30-year bond could be at 1%. Again, if the Fed acts, if market demand is there. So the idea right now is that, the other thing that Mnuchin said, and he did preface it, but it did sound kind of self-serving. He said, not that the Treasury's in business to de-risk people's portfolios, but he was trying to make it sound like it was some type of feature that this way you would have a 50-year bond, a 30-year bond, and people could play the whole spread across the spectrum of 2-year to 50-year debt. Not sure that that's attractive. He's also not sure, but he did say that if the market does warrant this, he says the U.S. Treasury has to be innovative. I'm not sure what that means, that the Treasury has to be innovative. Sure, it is somewhat innovative. It's not groundbreaking. There are longer-term corporate bonds, and we've mentioned the sovereign bond issuances of Austria and the United Kingdom. So it does come down to market demand. He said there's some technical issues. Seriously considering it for 2020. I'm not sure it adds much to the whole mix, but what it does add probably is if it doesn't detract from any of their other bond issuances, it becomes an additional tranche from which to raise capital. So, for example, if people who currently own any of the 2, 5, 10, or 30-year notes and are constantly at the auctions buying new treasuries or in the secondary market buying treasuries, if all they do is allocate some of their capital on the long end from the 30 to the 50, it somewhat helps because you're pushing the debt out, but it doesn't really create any new demand in the aggregate for U.S. debt. But if indeed it creates some additional demand, well then hooray for Captain Smaulgld, because then the U.S. has managed to find a way to issue even more debt. Let's see if you guys, what you think of this idea. I think it'll probably happen, subject to no one wanting it, but here's the thing with no one wanting debt. No one says they want debt, but everyone goes out and incurs it. So I would guess, if you had to guess, that this thing probably will happen just because someone or some countries or some entities are going to want more type of debt, whatever the United States is putting out there. So yes, Herb Levine says America the new Argentina. I think Argentina has a 100-year bond, which is odd because if any country can be predicted not to exist in the next 100 years, it might be Argentina. Now, it may be that the country exists, and we saw, like China still exists, but China, few know this, defaulted on its sovereign bonds during the communist era, and that is definitely an issue. And whether the new government will take on the old debt is generally questionable. Why would they? And China didn't. Those Chinese bonds issued, I don't know, the 40s and 50s, they are no good. Maybe it was even early when they issued them. But the point is that a government can decide, a new government, a populist government, a communist government, whatever government can come in, even though it's the same country. I do apologize. We got cut off again. This is happening quite a lot, and I think that we may have ended the stream unwittingly here. Looks like we're offline, even though I turned the thing back online, and so I'm not sure we can continue. That's a start streaming. That is streaming. Let's see what we got. Nope, we're done.